starting with the X-Tracker Eurostoxx 50. It's an exchange-traded fund incorporated in South Africa, Byron.
The fund replicates the price and yield performance of the DJ Euro Stoxx 50 index, which contains the 50 largest and most highly liquid European blue chip companies.
Market cap here of 1.7 billion rand, a dividend yield of 2.25%. Narina, let's get your expert opinion.
Right. I think I specifically chose this one because I want to illustrate that the choice of a passive product is very much an active choice. So it's very much about what am I getting by buying a particular ETF. In this case, the DBX EU Exposure Eurostoxx 50. So this is not about should I choose an ETF or not. This is about do I want to be invested in the top European stocks and what is my view on the Rand Euro, because those are the two important drivers that's going to determine my performance in Rand terms, in terms of what do I get from it, as you've experienced in your hot stocks portfolio. So I think for me then it just suffices to say what do I think is the investment case for the European stocks in Rand terms at this stage. I feel very comfortable that I think we've only started to see the benefit of European equity market performance. The ECB have been relatively late to the quantitative easing game. There's a lot more to come.
But you feel that quantitative easing is going to kick up? And
Definitely. Definitely. We've seen it already filter through into all the other asset classes. Equities was the one that lagged. And that's why I feel that European equities still have some catch up to play. Also, as a response to that ECB quantitative easing program, in the last quarter, we saw significant strength in the US dollar, concurrent with that weakness in the euro. So the Rand Euro hasn't really done all that much. I do think it's time for a bit of a change in that direction. And therefore, I do think that the euro will be the one that will be slightly stronger. The dollar a bit weaker, and that means that there's just a little bit of extra pickup to be achieved from your Rand Euro exposure.
Byron, does this fall in line with the view from Vestact on Europe at the moment?
Yes, I agree with Narina. I think the trend we sort of saw from the quantitative easing program in the US was more a confidence type booster, and then allowing banks to be slightly more aggressive in terms of lending, and businesses to be slightly more confident in operating within the Eurozone. And obviously we've seen weakening in the euro, and we could well see the euro strengthening as those economies start strengthening. I think when you look at the tracker, between Germany and France, I think it's about 65% of all the constituents,
yes.
And big exporting nations, so they will certainly be benefiting from the weakening of the euro. Just remind me, what are the big sectors? I think financials are a dominant sector within the
yes.
top 50. What else is there?
Telcos?
Not so much. They do have some telcos in there, but it's actually quite a nicely sectorally diversified ETF to own. So financials a big weight, most definitely, but there's also healthcare, there's some utilities in there. So we've got something like Total, the oil company in France, for example. So a good consumer exposure also. So really quite broad-based, whereas I think in many other markets in the world we tend to get sort of sector concentration or dominance. So I do like that diversified aspect of the Eurostoxx 50 in particular as well.
Byron, would this be one for the portfolio? Do you call it hot or not?
I'm bullish on the European recovery story. Obviously, Greece is big time in the headlines at the moment. You know, calling on Germany to pay them for World War II and all the damages. You know, desperate times call for desperate measures. But I think the overall economy is going to, you know, benefit from that weaker euro. Germany showing signs of growth. I'm fairly hot on this one.
Narina?
Definitely hot on this one still. I think especially on a slightly longer term view. We've already had good performance over the last 3 months as you've experienced. I think there's more to come for me. This one is hot.